All right. Hello, everybody, and welcome back to another Pepperstone live event here over on YouTube. Today, we've got to talk about a lot because, of course, volatility has spiked. The VIX, the volatility index, hit 65 this week. And that is something we don't see very many times over the last couple of decades, four to be precise, Tyrone. So today, we're talking about everything from stocks to commodities to, of course, FX and everything in between, including cryptos. It's going to be a great session. There's a lot of learning experiences from this week. We're going to go through a lot of technical analysis. And as always, my name is Thomas Atkinson, joined by Tyrone Abella. Tyrone, what a week, hey? What a week.
Massive. We finally get to see these. Like, welcome, everybody. We love it. We love the volatility. And I think we've been talking about it. It's been brewing, Tom. You know, we were looking at the VIX only a week or two ago. We were saying it looks like it wants to pop. It looks like it's about to go. And we finally got it. Yeah, did we expect it to get to 65? Well, no, of course not. But something was brewing. And yeah, we certainly saw very, very exaggerated moves. And we've obviously seen some pretty big corrections of those moves even in the last 24 hours. So I think we've got a lot to get through. So we'll jump straight to the disclaimer and we'll get into it.
Yeah, absolutely. We'll see you on just the other side. Quick disclaimer. Okay, well, welcome back, everyone. So US 500, pretty much VIX 65. Just to quickly start, I guess, here, let's look at the volatility of this week because I put a big red circle on it, Ty, just to kind of show everyone how rare it is that we see these events. We're going to go out to a weekly, and these are the major event periods that we've had over the last pretty much 2 decades plus. And you'll notice that what happened this week is symbolic of usually effectively financial crashes, something that we haven't seen yet anyway on the markets. And it looks like some of these things are coming back into more uniformity. Of course, we need to talk about the US dollar yen because that was where a lot of these problems were supposedly arising. And you'll notice here that the VIX hit 65. That usually is short-lived, and it was short-lived. And of course, we ended up seeing a bounce. Now, if you ever see VIXs this high, it can mean capitulation. So effectively max fear. And I would say that most of the time, whenever you're going to see a number like that, Ty, it's usually after more of a sustained sell-off where things are crescendoing into extreme fear, won't they be? I mean, that's what happened usually at almost all points.
Yeah, this one happened very, very quickly, didn't it? And look, it wasn't like it wasn't expected, but I don't think anybody expected the magnitude of the moves. Like every day, it was just like bang, bang, bang. And I think, yeah, that sets, we do know that, yeah, that quite often sets a bit of a trigger for margin calls and things like that. A lot, especially in the stock and indices space, a lot of people don't realize that they automatically get shut down if they don't top up their account in 24 hours. So when you see, 3 days of sustained selling, you know that the margin calls are starting to get triggered because you always get 24 hours notice no matter how much the market drops. But if you don't act in 24 hours, the broker will start to execute sells to cover their positions. And in basically 72 hours, if it's still selling off, that triggers another line of them, doesn't it, Tom? And then quite often what happens is the market's full harder, and it's just constant selling because it's forced selling. It's not really people selling out of the market. But I'm not sure about you, Tom, but I've had at least 3 or 4 people call me even this week and say, I sold out of my portfolio. Now I'm just waiting to get back in. It's amazing how many people actually jump out at the worst possible time.
That's true.
And I'll tell you that they would have done it just as the market started to rise. And then, all of a sudden people think that the market's against them and there must be like, they've got cameras and Google in their computers knowing what they're doing and the market goes the other way. Obviously that's not the case. But it's I think it's the fear in the market, and it's a worldwide fear, of course. Look, there was one day there that every major market or indice or commodity was actually down. It was actually a sea of red, and that is extraordinarily unusual. Generally, something is going in the opposite direction. Gold might be going up, or the dollar index, or oil. There was a particular time over the last 3 days where everything was just red. And when that happens, boy, oh boy, the market is moving. And that's when you're going to see a VIX at a ridiculous number.
So I was doing this live analysis coming into the US market on Monday, Ty, and obviously we were seeing the peak fear coming into that event. And I wanted to go through everyone here about what we actually figured out together as a community at that point. I thought it was really interesting to be able to analyze the S&P 500 to a maximum fear. And what I found was something very easy that we can all put on our charts for the future that we've talked about here before, but I thought we'd add it together if you guys would like. Would you like that, everyone in the chat? Let us know. Put the comments in if you want me to walk through something that helped us really find, I would say, the bottoming of this market, and in many ways put things back into context when things or the times got tough, because that is one of the hardest periods in markets to often deal with. So what it was we were dealing with basically a market that was in free fall. So it came in very, very aggressively, and there were three techniques that I used in this case. The first one was what we call an anchored VWAP. And it looks like a few people do want this. So an anchored VWAP you can get inside of the Pepperstone with TradingView platform. And what you'll want to be doing is you want to be going over to this area here, generally the Fib 1 or the long position one, and then you'll get the anchored VWAP. And what you want to do is you want to pop that on the lows of serious swings or the highs of serious swings. And why do you do it? Well, anchored VWAP is kind of like another great dynamic level of support. Obviously, it's based on volume as well. So in this case, what you want to be doing is using anchored VWAPs a little bit more. Certainly can help. And you'll notice that the market tapped that anchored VWAP perfectly. The second thing that we did was we used one of our favorite techniques. We actually have some videos over here on Pepperstone's YouTube channel where you can go check these out. So definitely do that. Have a look at fixed range volume profile and volume profile work. And we've done a bit of these over the past couple of years where we've discussed it. And what we found was whether we were using Pepperstone's feed for the US 500 or ES futures or anything else, we were getting a lot of heavy trade that was coming in between around 5,100 and 5,000. Okay, it's very interesting. Now, what I did here was I pulled from the low to the high. With volume profiles, it's very important to be more consistent on what you're actually looking for. We're getting a massive market sell-off. What is interesting to us as traders and investors, Ty, where are the trades on the way up? Where were all of the positions added? And where was the most traded position? And in this case, it was exactly where the market came back down to. So that can certainly help us make some better choices. Now, the reason we put a 200 simple moving average on the chart, which is one of our favorites, is because the stock market anyway, the S&P 500, often loves this level. And there are a couple of phenomenon that we've observed over the years with the 200, and that is that when things come in generally in free fall, even if they fall through the 200 moving average, I think in every occasion, Ty, the market has actually been able to recover back to the 200 relatively quickly. So usually one of two things happens. It comes down and hits it and finds dynamic support, especially when you're correlating it with other things. Or if it does drop through, it generally will come back and let you out. And you'll notice that's exactly what happened in the 21 sell-off, and it acted as dynamic resistance throughout that point. And if you actually go back through history, especially similar periods, possibly back like 2018, even over here, we dropped through it in 2020. We came back and we retested that zone. So it allowed us to make a better informed decision with everything considered, that even if the market was to drop through that zone, there was a very good chance it would actually come back based on historical standards of when it does fall through, it comes back. And it's done that, every time over the last 10 years, pretty much. So definitely an observation that I thought you guys might like along with the other stuff.
Yeah. While you've actually got volume profile on the agenda, Tom, I did have actually a question from this morning's stream, and I promised him that you would cover it tonight because I know you love a volume profile. And
I do.
The next big industry we want to have a look at is the NAS. We had some people wanting to look at the volume profile on the NAS, and where you felt the most traded zones going to be, and where our potential levels could kick off from.
Okay, so we'll break it down for them. I'll use the S&P just to start, and then I'll go over there. So when you're doing this type of analysis, again, top to low here is all I'm doing on the S&P, but we'll do the same thing on the NASDAQ in a moment. And what this is telling us is that we know where the most amount of trade was on the way down, and it was finding support around that 54 kind of 40 zone. So that means that if the market was to come back up to here, that this would be a critical point for the bears to take back control. Now, Ty, when you're eyeballing the markets, I'll zoom this in so everyone can see it. Can anyone in the chat guess what kind of other level, other than what I've got here on the charts, what other thing could we overlay on this chart? Let's do an interactive one. Let's get someone in the chat to answer this. What other top indicator that most people use in technical analysis would you potentially overlay on this chart? Because it doesn't matter whether it's a currency, whether it's a commodity, whether it's a crypto. We would want to do this every time, this same type of analysis. Again, it's about replication, guys. We have to use a very similar analysis approach so we can get the reps in. And while I'm talking about reps quickly, Ty, I've read this from psychology books. I've done a lot of work with people over the years. Around 40 reps is the amount of replications you would want with any trading system before you start to actually build a supreme confidence in that system. So a few different comments coming in. Go for the fib level. We've got a few very smart cookies in here. We've got Blake. Yes, correct. Frasado, Reese, Talone, Aussie. Absolutely. We would use the fib here. And the reason we would want to put a fib from the high to low is because there's a high chance that this is going to come into what we call the golden pocket. So this area here is certainly key. The most traded zone with the golden pocket, with an anchored VWAP that comes off the top, with Tyrone's favorite, which is the daily 20 moving average. It's likely that if we do get a very aggressive move, which is partially called by the Bank of Japan, which we'll talk about in a moment, because of course, typical central bank move, Ty, they panicked today. And what's happened here is that this market comes up, this will be a key zone. Can everyone see how this could be a point where a day trader, where a scalper, where someone that's got a 30-second chart even might want to be looking at market action around this point? Everyone in the chat know why we might want to do that? I think you guys would. So let's move over to the US 100 for you so that we can check out the NASDAQ, and we'll pull it from the high. So the high is a little bit different here on the NASDAQ because, of course, it's been falling for a longer period. And again, we're going to get some interesting points. Now, I've already done the NASDAQ analysis, so I knew exactly what we'd find, Ty. Not only is this point super interesting, can anyone else in the chat guess why I might like this level? And it's not just the daily 20, and it's not just the anchored VWAP, which I do like. I like all of that, by the way. What other thing have I got on this chart that is there that I'm just like, makes sense? And it's not even a fib. Yeah, a few of you will get it. It's the trend line. So we've got a trend line coming off these lows that did act as support, and then that's going to act around resistance. So imagine if this market was to break up and come back to this zone. Would this be a key area? I would argue for sure. It is a very clear level of trade, isn't it, Ty, when you put it on a fixed range volume profile? A very powerful technique to use these together.
Absolutely. I think that, again, this is a resource that we never had available when we first started trading, but now, by golly, when you load it up and actually it interacts with the things that we already know and love, it's a real powerful tool.
Yeah. And what I've noticed, like I pulled it from the top down, but I don't think it would go that high. This would probably be more likely to hit into these deeper. I've got a 75 fib here. I actually like the 75 fib quite a lot. So 61.8, certainly key, 75. And what I would do then is I would draw a block, and I would basically say, this is a point of interest for me as someone that's in, let's say, taking it long to potentially see a turn event in the markets. And for someone that's wanting to go bearish on the market again and then push it to maybe a new low, it's possible. Anything's possible. This would be the area I'd like it. So if you do enjoy this type of stuff, let us know in the chat. But that is a great question, Ty, and that's the way I would break it down. So I give it a thumbs up if you like that content and want to share it with other people. All right. So yeah, NASDAQ and the S&P certainly covered their, Ty. I want to go to some currencies, though, because I know a lot of currency traders out there. We'll do a bit of gold, a bit of currencies. Let's move over to the US dollar. Now, US dollar went super weak off the jobs numbers last week. So many things. By the way, those jobs numbers, I know they were bad, but every single one is not even bad, still positive. Every single jobs number is revised up, down, and left sideways. So I don't really trust that one. But there were a couple of signs of economic weakness last week. And what happened was all the yields dropped like a rock. So when all the yields drop like a rock and JP Morgan start coming out and saying, we need interest rate cuts, that's going to weaken the US dollar. So we saw the US dollar get tanked. And then since that point, yields have started recovering, which of course has added to the US dollar starting to strengthen. So what are your thoughts here, Ty? Do you think it's actually going to bounce up? I've got a short area on the charts here for everyone to see as a possibility of a zone that we are interested in. Would you agree that you think this thing is going to have to get to the mean reversion, get to the 20 again?
I reckon there's a really good chance that it will. And I think that it's a positive. Look, it's obviously a momentum move it's effectively what we're talking about with the other indices, that we're basically looking for them to get to a recovery point. I would be reluctant to be longing it after that. That's for sure. I mean, I think that could be a really good short area, like you've got circled there. And I like it. I like it a lot for a few reasons, because the 103.80 to the 104.20 has been an extraordinarily strong zone. It's been heavily defended for a long, long time. So, all we're doing really is testing what has already been proven to be extraordinarily strong support. If that gets broken to the upside and all of a sudden we're trading above 104.20, we would change our minds very, very quickly at that point, because then it's broken through very heavy resistance. But as it stands, a move up to there, I'd be looking for that reversal. And if we see that, it's probably going to produce the opportunity on the euro. I mean, the euro is the one we want to trade here. So, yeah, realistically, if we get a pullback up to that level, then we're going to be looking for the short there. That could be the long opportunity on the euro that really, I still think has been a little bit lackluster. I just think that I know it's moved around and all around, but to me, it's still been a little bit lackluster compared to what the dollar index has done.
It has.
And yeah, I really, it hasn't performed that well.
No, even though the euro is the biggest part of the dollar index, combo, basically, it hasn't really performed extremely well. You would think that when we got the weekly up to this point here, we were going to blitz, and we were more than likely, in my feeling, going to hit around 110, somewhere in here. There's 110.30. We just didn't really see that follow through the way I would usually expect it to. So it has weakened a little bit. Again, what that dollar index up would do for the euro is it would weaken somewhere into this point. And again, if you pull a fib, you're going to notice quite a lot of different events. You're probably going to see an anchored VWAP there. You're probably going to see a 61.8 fib there, quite a few things. So certainly a point to watch, somewhere around 108.70 for me, Ty, on the euro, a zone that we would want to be watching. Yeah, now, there are some interesting movements in the currency commodity world. One of them has been the absolute distraction of oil. We've looked for a few turns on this in the show over the last couple of weeks and just never got the right technical analysis kind of breach. Now, there is one little high steal here that I think is interesting. It's very marginal. And then the markets come down, and a lot of people will see this as an inverse head and shoulders. Now, I've got this marked as a bull zone for oil. That's because if we look at the higher timeframes, where most of the biggest hedge funds and biggest players actually do add their orders and start defending areas, remember that you've got to think of the market as like battle zones. And there's a structural area where they're being defended. And so it's being defended. And if that is given up, then effectively the market will move towards the next battle zone. And that's what I call market equilibrium to the next market equilibrium. So we've found what I would call a massive battle zone for oil, and it has currently been finding bids. Now, this is a left shoulder, head, right shoulder style pattern, certainly a basing style pattern, and it all comes back to 74.50 breach. And if that happens, I feel like we're moving towards 77 tie, which proofs pretty nicely as well, which basically means that this distance here is equal to that distance there. So I like a move to 77 this week. It's actually my trade of the week in terms of technical setup. And I'm looking for oil to finally stop the bleeding.
Yeah, I do like the 77 to 78 zone a lot. There is a hell of a lot of resistance there, and it does prove very well.
Yeah. So what are your thoughts on breach through 74.50,
Love
possible reach 77?
Love it. I think it wants it too. I think it's tracking up that way on a few different time frames. It's promising a lot, actually. Let's see. Oil's been, by the way, oil has been a fantastic trade this year so far. Like, I know we're only in August, but so far oil has been an absolute gem of a trade from a technical standpoint. It's bounced between all the right levels. It's had support where it needed to find support. It had resistance where it needed resistance. And it's bounced through those levels really, really nicely. So from a technical standpoint, and it's not always that way, Tom. Like, we know that oil sometimes can be influenced by things that aren't as technical as we would like, and it's all over the place. It's a crap show. But this year it's been very, very well behaved, I feel, and I think it's given us a lot of good opportunities, a lot of good trading opportunities this year.
Yeah, some excellent trades there, both the long and the short. I will say that I've looked more for longs this year into some of these. And that was great at the start. And then, of course, we did have a couple of, I would say, misfires in some of these areas here. But the shorts that were more aggressive in this case, as shorts often were, those ones did work out. Here, though, this is where we found that superior base that made us want to buy pretty strongly back in June. Is that only back in June? Wow. it seems like a while ago, but
It seems
that
like a
was
long time ago. Yeah.
yeah, wow. I actually just looked out in the air. It's been a long week. This week's been long, guys. Anyone else feel like it's been long? Maybe it's just because I've been trading the US market and watching it so much here from Australia because it's been so volatile. But it feels like it's been 3 weeks just from the start. All right, let's move over to gold. Let's have a look at gold. Very strong still, even with its little bit of weakness that's come through. A lot of people expected gold to fly through and world issues and everything's going to be fantastic in gold. That's not really how it plays. Gold is still a currency. It still is a asset class that will fail a little bit, at least initially, when it comes to volatility. So gold has come back down to around this 23.94. I'd say this is a nothing zone really for it. We know where the key level buys are. They are at 23.56 and 23.30. And I would not discount the fact that gold could move down here and still be quite bullish. So from this perspective, where do we need to see gold? If you're a gold bull, if you really want to see strength, above 24.50 with the close. If a weekly close is somewhere up in here, you'll see I've got an alert even higher. It's going to fly. And at the moment, it seems to be coiling in a very tight range. So gold, a little bit difficult, more difficult in the small time frames. If we go really small at the time of this recording and we have a look at the current little trend, I guess it's trying to trend upwards. It's gone down low, high, lower, high, lower, low, little technical day trade in there. And then it's trying to reverse here to go back up to 24.10. So that's certainly at the time of this recording. But overall, it's been stuck in that kind of range. We knew that this level down here at 23.50 was going to find buyers. An excellent trade there only a few days ago. But since then, the best trade this week has actually been the short that was in here. And that is a replicable short that was there. So your thoughts on gold, Ty? Anything in particular you're liking?
Yeah,
or just trading?
I actually think it's really hard right now. I think that it needs to kind of, start. I agree with you that I think if it pushes up from here, after all of this craziness that's happened, if we hit 2,500, I think we might see a bit of a run. And who knows? I'm not even going to try and call where it could stop, because I think that when it does eventually break through, I think you could put $100 or $200 on very, very quickly. I wouldn't be really looking for that very short, $10 or $20 break. This break might be an aggressive one. And really, look, I think under the circumstances, it behaved itself fairly well in what has been an extraordinarily volatile market. I think it behaved itself pretty well, really. And you're right, the short was the trade that you would have taken. I think it's the only one that really presented well. I'd be looking for a break to the upside, I think. I think it's had its chance to go down. And if it did go down, I'd say, well, all right, fair enough. But it held up pretty strong under the circumstances, I reckon.
Got a few people asking the question here if we can look at the silver trade. It seems like you've been liking silver to some degree. So do you want us to walk us through silver? I mean, 26.50 to me was a massive hit, which actually coincided with the market lows on Monday. But what are obviously you've got some opinions here on silver, Ty. Go us through.
I do. I seem to have an opinion on everything at the moment. I don't know if that's a good thing or a bad thing, but I really love this level. I think that the 20, we were getting death threats and hate mail when we said that there is a potential support zone at $27 when it was sort of hanging around that sort of 30, 31. Nothing's impossible in the markets. And I think it's important to realize, and probably one of the lessons for tonight, actually, I've got a couple of lessons. I haven't actually got a trade for the day. I've got a trade idea of how to navigate a market like this, which I'm going to actually discuss a little bit later. But what I think is really, really important to bring to the table is that no matter whether it's silver, gold, BHP, the Euro USD, whatever it is, when markets are in free fall or even at an exaggerated move on the way up, when they get confused, they often go to the more serious level of where there's support or resistance. They go to a safe haven, if you like, wherever there's a very strong traded zone. That's quite often where they'll gravitate to. So they don't stay lost for very long. It's very rare that a market will explode in one direction, negative or positive, and kind of stop in the middle of nowhere. And silver did just that. Like, it came all the way down to that sort of 26 zone. You'll notice that everything that went wild did the same thing. Like, it stops at a very, very important zone. So I think that when you've got markers on your charts, and this is why we look at the weeklies, Tom. This is why we look at the bigger time frames, because a lot of people say, why are we looking at a weekly when we're a day trader or when we're a small time trader? Because the weeklies give us those big key zones to look
Yeah.
out for in case of what happened over the last few days, where a market goes into absolute free fall. Because quite often when you're looking for a target, that's the one where they're going to gravitate to. I think another lesson that you could have learned, from this volatility, we haven't learned it because we know it, Tom. We've seen many of these, haven't we? Now, like it's this is just common practice now. But what you'll find is, being ready to hit the take profit button when it hits your level is not a good strategy in a very volatile market, because it could reverse several hundred pips or many percent before you actually get a chance to take it out. Like if you could wake up in the morning, as an example, if you had a take profit of, say, $27 on, I'll use a better example. If you had an example of, say, a 26.50 take profit on silver, but you were going to do it manually, and you weren't going to actually do it, all of a sudden it's 50 cents higher. Now, all of you would know, if you trade silver, that the contract sizes that you use, 50 cents is a lot, like a lot. And this is only a small example. If you look at something like the US dollar yen, like you could be talking 300 or 400 pips difference. So don't use mental stop loss and take profits ever, but especially don't use them in a volatile market. Have your take profits set. So if it does happen to reach that zone, it will actually execute for you. Don't ever worry that the market might go past it and you might have made more pips. That greed will get you every time, Tom, won't it?
Yeah, you can certainly leave some things on for too long, and they can go bad. And it certainly depends. Like it's not always easy. You have to go for what's more likely statistically, would be what
Yep.
I'd say.
Absolutely. And look, I think with silver, like where it could go from here, I think that it could have support here. I think that if it's going to bounce, this might be one of those areas that it will. I'm looking for a bit of I reckon there's danger in front of it though. I think 28.50 poses quite a few problems for silver. At the moment, the 20 moving average is kind of hovering around there. But yeah, that sort of level, there's quite a bit of role reversal there. And yeah, look, let's face it, it's in a downtrend now. It's got a 20-50 moving average cross down. We've got a series of lower highs and lower lows on a daily time frame, which is nothing to sneeze at. And a move back up there could be fought quite heavily with resistance. So I'm not that bullish on it. I'm not going to lie. I would kind of want to see it above. I would want to see a daily close above 28.80 actually before I'd even consider a long on this one.
Yeah, I think from a trade perspective, that's how you look at it. From an investment perspective, it's a pretty solid zone from a TA point. You can see here that we've actually hit close to the daily 200 as well, which we're talking about. And you also notice that it's quite well respected. You can see a little bit of support there and obviously resistance until it broke through. So yeah, this is a significant pullback for silver, but no real strong structure. Yep. Let's go over to the US dollar yen, because US dollar yen was the the talk of the week, with, of course, Bank of Japan intervening backwards today. So they raise rates. The market has a fit, as in we saw this huge de-risking, especially margining of people. And we've talked about this a few times. We discussed the idea that maybe there would be some strength around 147 tie, and it went all the way down to the next level at 141 almost, and then bounced up. Now, since that point, I posted this actually over on our X account, and basically the Bank of Japan, one of the came out and said, "Oh yeah, we're not going to raise rates anymore if the markets have a fit." That's actually what they said. I was like, you serious? So that's why the markets are up so much today. They literally said, we won't raise rates if the markets complain. Does that sound ridiculous to anyone else in the chat? I mean, if you want to cut through it, that's kind of what they told everyone. So it's kind of like saying, well, every time you complain, we'll just leave them there. So we're not going to raise rates anymore.
It's great to see they've got the right people making the big policy decisions for the country right there. Quite amazing, actually. But I think, look, it went through so many levels. It becomes almost untradeable when something's in free fall like that. Like, I think you're taking extraordinary chances. There were good trades on the way down. Like, don't worry about that. Like 152 was my target. My target was hit. I was happy out of there, and I see it drop another 1,000 pips and I'm like, oh, wow. But am I sorry that I didn't leave it on? Absolutely not, because that's not what trading's about. Trading's taking, the 500 pips that actually fell for me. And I was very comfortable with that. When And it's probably one of those things where even if it got back to 152 now, it would probably be a zone where we could actually see quite a bit of resistance there. You can see that where Tom's drawn the rectangle there. If you extend that out, you'll see that it'll actually hit that resistance point back in October of 23. And it wouldn't be a surprise to see it, test that level. The 20 moving average will probably be there by then, and it may well roll over from there as well. So certainly one to keep an eye on, that's for sure.
Yeah, we can put things like a few VWAPs on the top as well. They'll all intersect pretty closely, daily 200, etc. They'll all intersect around the 152. So that's another point to watch for the yen. Look, it's going to be volatile. I think what I would say here is I've warned for a long time, and this is why I haven't really bothered with the yen pairs too much, that this is the type of thing the Bank of Japan does. It's not new. They've stuffed around on this currency for so long now, ever since really I've been in trading. Since 2007, I feel like they've been doing it, but Abenomics actually was after that. And what was happening here is just the standard Japanese wild action that does happen. 152 is the key. The Nikkei was, of course, the other discussion point. And I want to just kind of reiterate the kind of TA that we did before. Now, what a lot of people are looking for is people believe that volatility brings great opportunity for traders. It brings great opportunity for people that want to invest and buy the dip and buy positions and hold for longer periods. I tend to think that this volatility tends to break structure type, and it destroys actually a lot of the great replication you have. You want a bit of vol, but you don't really want vol over 30, because when the VIX goes over 30, it becomes wildly irrational. It means you've got to be very quick. Now, again, that comes with having replication style trading systems. If you want just like, wow, it's going to move like 150 pips overnight and you could gamble on it, then that's the type of time that most people come in. But remember, volatility gets us excited about markets, but it doesn't necessarily give us the best trading structures. That's something I would say. Now, if we go to the Japan 225, because I guess this was realistically what everyone was talking about this week, we could actually use another analysis technique, which we had before, which again was volume profile. And if we bring in the volume profile from the bottom to the top here of that run.
I thought you were going to say run for the hills, Tom.
No. This is the zone. So I actually thought between here and here, I had that boxed as where I believed we were going to find a bid in this particular market. And of course, we found a bid right at the lows. But in general, you'll notice all the closes held that point. So again, just showing the volume profile tool on the higher timeframes can be very helpful, and on the lower timeframes. And another thing that you'll look at here is, well, you might say, okay, well, it's all over. The Bank of Japan has saved everything. Thank goodness for them. But I wouldn't say it's all over. I'd just say this market is recovering back to a point where, again, bears could sit. And we all know that's going to be around 38K. So what's that going to link up with? Anyone in the chat? It's going to link up with some of the other pairs that we talked about before, yeah? The NASDAQ, the S&P 500. I think you'll find that even though it's all different percentages, they all love to hit those critical levels pretty close together, don't they, Ty?
Absolutely. They do.
Yeah.
Yep.
So
I think that's a really good example. I think that's probably one of the best examples we've seen tonight of the volume profile and how you can use it.
Yeah. Look, I did this live. Obviously a few of you in the chat were probably there. Was anyone in the chat there live when I was doing it live? I was doing all this live, and it became blatantly clear to me that actually the chart to watch was semiconductors for the fall. And you'll notice I have two arrows towards it. But again, it's just putting together, well, these markets are all interconnected. The beautiful thing about Pepperstone, the platform, you can trade CFDs in so many different pairs. You can gain access to all these different tools and instruments, and then you can apply that when you understand that all markets are connected together. And a lot of the time, they'll all hit at the same point. This just happened to be one of my favorite charts, along with the S&P 500, along with the Nikkei. They all kind of got smashed, and silver hit as well. So it was it's a great learning week for people that are out there. I know you guys want I want like 50 trades here and there. They are more, structural bases. One of the ones that you could have been very bullish on is probably going to be the Russell. Now, the Russell fell and fell and fell, but you'll notice, again, the volume profile technique, most traded zone, golden pocket of the last entirety move up. This is a phenomenal level from the Russell tie. And this one actually did give us structure. So let's just have a quick look here on the 2 hour. You can see here a low, a high, a lower low, a higher high. And the entire way down, it was just getting trashed with lower lows and lower highs. So this was the first turn point. And for a trader coming off the key zone, you've got to start getting a little bit bullish there. And I think traders did get bullish there. They defended it and they've put stops under here and under here now. And they're trying to get this thing back up. It's finding a little bit of res here, but it's got a good chance of trying to go for daily 20.
Most definitely. Yep. I love it. I'm going to go to my lesson of the week, Tom, because I think it's very, very relevant to what the markets that we're in actually. Now, I think the one thing that we can all agree on, if we go, I'm going to take us back to the S&P 500, because I think that's probably the one that is so easily traded in a CFD format, obviously. If we go to a daily on the S&P 500, yeah, the thing that's blatantly obvious. I mean, even we could pull off a child out of grade 5 and say, what is this chart doing over the last, few weeks? Obviously down, right? Very, very, very heavy selling down. And a lot of people get a little bit confused on how you would actually get involved in that trade. Okay, it's one thing to identify that it is going down. It's another thing to actually get involved. And this is why, Tom's probably going to sneak it to himself, because I'm going to mention my 20 moving average. This is why I love the 20 moving average so much, because whether the market's actually behaving itself or whether it's an absolute free fall, you're going to see trading opportunities. Now, this one, I think where Tom's circled right there is like he's reading my mind. That was just a golden sell, right? And you look at that and you think to yourself, that is just amazing. That's a 61.8 pullback, I'm pretty sure, from that movement. If it's not, it'll be bloody close. And then down it came. 20 moving average, it had many reasons to sell. But how do you get involved if you've missed that trade? And what I want to do is take you back just a little bit in time and drop to a 15-minute chart and show you how easy trading can be when you actually have a system that you can follow. That's all we need to do. We take it back to that level there. We're talking about that period between about the 2nd of August and the 5th of August. So a lot of when that selling was actually happening and when it hit that zone. There's probably about 10 or 15 entry opportunities there, Tom, that you could have easily taken, that you could not possibly have stuffed up if you were trading in the direction of the prevailing trend. Of whether you're a beginning trader, an advanced trader, or an intermediate trader, the one thing that no one will argue with is that we've been in an extraordinarily heavy downtrend over the last few days. And you look at the candles and you say, how do you get involved? When you go back to the smaller time frames and you see what we talk about, especially what I talk about every single day, pull back to the 20 moving average and go in the direction of the trend. There was about 15 entries there that you could have got to all the way down to that 51.80. So I guess my point is, never be afraid of a market that's moving very, very quickly if you've got a trading plan in place. Don't go and just jump in and say, you know what, that's what everybody else is doing. Wait for the opportunity for the pullback. But even in an extraordinarily fast-moving market, look at all the opportunities that you've got, and they were all very, very easy trades. And this can be replicated. This is not just the S&P 500. You could have seen the same thing on the NASDAQ. You could have seen it on the Russell, basically anything that moved. And yeah, these opportunities are there, but you've got to be patient enough to wait for the right opportunity on the pullback and have the conviction to trade in the direction of what the prevailing trend is. Don't do what so many beginners do, Tom, and we've seen it all before. Try and reverse the trend. Try and pick the bottom, time to go up. Every time it got there, we've all done it, and it's exciting trying to stop a waterfall. But you don't want to stop a waterfall. You want to join the waterfall, don't you, Tom? You jump in it, swim underneath the waterfall, and then start going up when the market actually does it. Don't try and pick a bottom. Try and actually go in the direction of that prevailing trend and use the most basic of techniques to do so. And you're going to have a lot of fun with the volatility.
Yeah, so there'll be a few questions that'll come from this. Like, how do you know which moving average? Like the 20 obviously is going to be different on different time frames. When you get aggressive trends, you'll want to be on a 15, 30, or 1 hour.
Yep.
Generally, you have to do a 1-2. So what that means is it must find resistance, dynamic resistance, and find a lower low. So let's say you have a sequence like this. That's the rule. Okay, 1-2. You want it to do 1 pull-up, sell down, make a new lower low. 2 pull-ups, sell down, make a new lower low. From that point on, you just keep doing the same thing until it breaches back above. How do you do a stop loss? You place it above the last swing. It's the only choice. So in this example, we have 1, lower low, 2, lower low, 3, stop loss here, lower low, 4, stop loss here, I guess, lower low. Up here, stop loss has to be here, lower low, breach a little bit, but not terrifying because it didn't make a higher high. So still good sequence. Lower low comes up, stop loss has to be here, lower low comes up, hold, stop loss must be here, lower low comes up, breaches, new high almost. Okay. So that is actually still possible to use the 20 if you wish to, though it looks very dirty. And considering it hit what we know it hit, that's going to be a problem. And then goes up through here, you're stuffed. That's the end. Don't use it anymore at that point. It's the over.
Correct.
Now, the loss trade is always going to be the final one. So you're going to lose here because your stop loss will be here. And the actual thing that's cool about markets sometimes is they let you get out. So remember, your trade is here. The market comes up, barely doesn't hit your stop loss, comes back down to the exact same level your entry would have been at. Whoa, I didn't expect that. Clean up your order, close it, be done. And actually, there was no loss necessary on this particular one. But that's how you have to do it. The 1 plus the 2 plus the low swing highs. And if you don't have the 1 plus the 2, you'll get stuffed.
Yep. You need and the 1 plus the 2 is effectively the lightning bolt that we basically trademarked. So yeah, if you get the lightning bolt, you are literally dancing. And if you really want to know a lot more about that, we've done videos on the trending moving average quite a while ago now on the Pepperstone platform. So jump in. But if you really want to learn it in depth, we do have the ultimate masterclass that actually explains this in extraordinary depth and different ways to actually trade it. That's probably one of the most important ones for TA, especially trading these sorts of markets. So it's very, very simple technique, but simple definitely wins the day in volatile markets. You don't want to be overcomplicating things when the markets are moving at rapid rates. That's for sure.
Yeah. All right. It's that time of day again, guys, where you can select a couple of charts. So pop them in the chat, whatever you'd like us to have a quick look at. We'll do that now. And we'll wait your questions. But this is a chart that was requested there, Ty. It's the double carry in some ways, the odd yen. Yeah, certainly the Australian dollar coming under some fire here against the yen. And it did a year of gain loss, it looks like, in a few sessions. Now, that's actually a big wiping. So if we take that as a percentage, 17.71%. So as an example, if you were accidentally in the Japanese market, well, I guess in this case, it would have been okay if you were bringing them back to odds. But yeah, you really did want to be on the right side of this currency trade, because if you had assets, cross assets, and that happens, well, it can wipe 17% of your overall gains on your cross assets out. A lot of people don't consider that, when they're trading into international markets. Why I cannot trade BTC and Ethereum on Pepperstone. Adriano, I would suggest that you have a quick chat to your local or your sales representative or trading representative, and they hopefully can answer that question. It could be the country, it could be something else. I'm not too sure. We didn't actually talk about Bitcoin, but we'll go there in a moment. Ty C says, Tom and Ty, Monday to Friday, are you awake trading New York hours at night?
That's an interesting question. We don't have to trade the whole session. Like we cover the open and the close of the US market every day of the week, actually. But look, when Tom and I were in the US for our Vegas conference last year, we thoroughly enjoyed being in the US during the market opens, didn't we, Tom? Because it was actually it's one of the best and sweetest markets to trade. And did we do it when we needed to do it? Yes, we did. Do we do it now? Well, I certainly don't. I'm up probably for the last hour of it before our morning stream. I know Tom's generally up for the first hour of it, but generally the big piece in between is very late here in Australia. So no, not really. The longer positions that we can set play out anyway. So not really. But you
only really need the close generally, and because you got 24/5 ability sometimes on CFDs, you don't necessarily, you need the close. So once you've got the close, you can make better decisions as even a day trader. If you're going to do opens, I mean, this week, of course, Monday required to be up later. If you wanted to get that, there's no doubt when extreme volatility happens, I get very tired. But hey, that's what happens. All right, so BTC hit all of our key zones. Obviously found bounce. Ethereum was the same. Really good nailing of key levels. I had them all there before that happened. So this was pretty much the top area that I'd been looking for a long time. So to see Bitcoin hit them was pretty exciting. Even the bottom end trend line actually got hit here. So yeah, some good stuff. We've got question coming in here for gold versus or XAU versus JPY. So this is gold versus the Japanese yen. So another one of, gold obviously will weaken just like the Japanese yen would. I noticed one thing straight away, Ty. If you actually take that length, I feel like this will be pretty much the same thing. Yeah, so exactly the same length. Daily 200, pretty close to it. You notice that a lot of the pullbacks have been stopped around that point, and that's actually the trend line of choice. So like with any moving average, if you've got a 1, high, a 2, high, 3rd, 4th, 5th, 6th, and 7th are all quite strong. So from the higher time frames, I would say this is in still an upward trend from that perspective. Of course, you may not like what happened here. I look personally, I wouldn't trade this pair, but not at the moment. But yeah, I can see why it found a bounce here. And again, I think it would go to about 360 from the looks of it. Line it up with US dollar yen, and it should be pretty similar. US dollar yen would be your main, and then this will be very, very similar to that. 20 moving average, etc. will hit there at the same point. Thank you very much for the question, though, Kelvin. I hope that helps. All right, guys. Well, I guess that brings us to the end of today's show. We're always doing this every Wednesday, so make sure to sign up. Links in the description down below. Give it a thumbs up if you enjoyed today's content. And next week, we hope to be coming back with some good structure.
Yeah, I think we're going to see. I think we're going to see a lot of stability probably play out by the time next Wednesday rolls around, and we might start to see some trends starting to really kick in. Yeah, absolutely. Reese wants us in London. Reese, we would love to come to London. We're working very closely with several key players, including Pepperstone, to hopefully take us there. We would love to do some London work. And I agree. I think it's a very good trading time as well, like a lot of the European destinations are. So now we are definitely looking at that, putting that on the agenda, because we love to travel and we love to meet the people who we feel almost in a relationship with, don't we, Tom? We do really appreciate all of your viewing every Wednesday night. We know you're giving up your valuable time to join us and support us, so we do absolutely appreciate that, and we thank you for your support. And of course, if there's anything that you'd like to see that we're potentially not doing that you'd like us to see doing, definitely let your Pepperstone representative know. They can pass on that feedback, and we want to bring the best product that we possibly can to you. But yeah, thank you again for joining us tonight. Trade carefully over the next week, because the volatility is still there, and we want to make sure that we keep safe. So use your stop losses and take profits wisely, and we look forward to seeing you then.
For sure, guys. Thank you so much for joining us. We'll see you next week. Bye for now.